selected sectors. And fourth, portfolio performance of our model portfolio picks. I'm sorry, but in such situation, I cannot pick the new ones for recommended shares because in this situation, it's very difficult to tell what's the past prospective, what's not prospective. But I show you some, I imply some possible undervaluation of the advanced chip technology company in the fourth section, and also some show you some what should we hold in the fifth portfolio performance. Let's move on to the first one in Japan return and the index return and currency. We have two primary indexes that represent Japanese stock market, Nikkei 225 and topics. This is a direct figure of the stock. There's some show the movement is similar. Sorry, this is sometimes sorry, some measuring figure is some different. But from the start of the 1st of the April 2024, this is movement is very similar, but from the 2025, topics tend to be more stable than Nikkei 225. This is some biases of the allocation of this index and fixed stocks. And this is US dollar denominated figures. Yeah, this is blue one is topics and Nikkei Ningo 225. And we see that some sort of form of the co-movement, we can see some co-movement in the topics and the Nikkei indexes. We see that, and we also see some appreciation of US dollars cause the decrease of the index price. Appreciation of JPY cause some depreciation in the Nikkei 225 because they include a lot of more exporting companies. The topics is one more fair indexes that average in the domestic and exporting companies. So it is really less affected by the appreciation of Japanese yen. So this is currency difference of the Japanese yen and your Singapore dollars. This is movement looks similar, and there is we present the currency return in the US dollar term. In the currency itself is no dividend paying or no interest yielding commodity, but there's some trend in the positive return, and also this is another currency risk. This is standard deviation. Japanese yen is more riskier than Singapore dollar in the US dollar term. So this fluctuation will also turn into the stock price fluctuation. So the JPY is more Japanese yen and Japanese stock is more riskier than Singapore dollar. And this is the US dollar denominated index returns. The topics is almost the middle of the indexes, and S&P 500 in the US and Threat Time Index outperform all of the indexes of Japanese market. So there's some slight difference between the topics and some size indexes of the topics. Topic C30 is the core of the 30 stocks that represent the large caps of the Japanese company. And last 70 is more extended figure for 70 picks large cap stock. Mid 400 is a mid cap stock representation index. Big small is the rest of the company that not attached to the mid 400. Nikkei 225 is the worst performing company indexes in the field because of the rather affected by the exporting perspective of current situation. Let's see that this is the return figures for if you start from the last 3 months or last 6 months or 9 months, or start investing in the 12 months, last 12 months before. there's figure that all of S&P and S&P and STI perform better. This is annual figure. And all of the Japanese market is showing negative return in the last 12 months. But sometimes it's alleviated if you start in the last 6 months. But this is almost very small returns. And S&P is also showing negative return in the last 6 months. And in the domestic figure, there's also a negative return exhibiting, but in the 9 months first performance, some large, mid and small show some positive returns because this maybe come from the bias of the exporting companies allocation in the mid and small. Let's move on to the performance in domestic currency in the each quarters. The first quarter is a really stable one before the August of the shocks of the August. This is a stable company, and the core 30 is also well performing in the like a US S&P 500. And third quarter show a very negative returns. And the fourth quarter is a recovery period, but in the first quarter of 2025 show negative returns in all of the markets of the Japanese market. And in the 12 months return is also keeping a negative return except the STI and S&Ps. So what's happened to the next performance? So this is overlapping. So I saw some comments of the Nikkei topics. So fluctuation with BOJ related stuff do not affect a lot. But the DFC release on January 20th negatively impacted the semiconductor industry for the fear of demand decline. United States Trump administration reciprocal tariff negatively affected the prospect of Japanese stock in the first quarter 2025, even before it disclosed and turned out to be effective. This is a pro-cyclical movement. So differences in index exposure to exporting company are also different inside of the caps. And then what's the difference? I show you some comments about the difference of topics and Nikkei. Topics, the composite is over 1,600, and Nikkei 225 is smaller peaks for the indexes, but weight is different. The market cap weighted average in the topics, the price weighted average Nikkei 225 is, and each constituent limited to the 5% allocation. But in Nikkei, it's about 10% allocation. So each has a problem. Topics is difficult to replicate for ETF or some index funded. And in Nikkei 225, the bias representation, upper 20 stocks of the market cap constitute 50% of the composite. So we see that some biases and difference of topics may be explained by such kind of biases. So best allocation Nikkei 225 to exporting company explain different topics and price movement of 1 quarter 2025. So I also have to see that the last 2 weeks updated figure of the Japanese stock and the USD Japanese yen exchange rate. Yes, there's some decline. So there's some decline in the Japanese stock because of the France export reciprocal tariffs, and also appreciating trend of the Japanese yen. But we also see some resilience of the stock price. Nikkei also moved like that way. In Japan's market, there is some optimism about the Trump administration time to be tend to be their turn down the bad conditions of the tariff and then move to the and foster back to the free trade. This is a reason of optimism. I think that if the industry average and S&P is continuing declining, so I think that this kind of optimism may be more better effect in the future. Down to the next slide, monetary policy and macroeconomic path revision review in March quarter 2025. So I have to apologize for my perspective. My analysis and the prediction was wrong in the last presentation. My previous analysis was that BOJ and government may permit inflation above 200% for inflation condition, mitigate the fiscal burden. Inflation, so in the condition of the first quarter and last one quarter, situation in the first quarter of 2025, that the inflation is about 2% of the target level, but BOJ may permit this. So rate policy rate may delay through the expectation January revision. So many of the participants in the market expect that in January, the policy rates may be revised. But I see that because of fiscal condition, the BOJ may delay the policy revision and schedule to maybe in the middle of 2025. But in reality, on January 24th, BOJ says policy rate around 0.5%, so 0.25% hikes. So government put off its perspective, government revenue spending balance tend to be positive fiscal 2025. This was disclosed in January 17th. So the government see the government perspective is going to be bad or some kind of some downward perspective for their fiscal policy, their fiscal condition. But BOJ cut hike rates, so my perspective was wrong. But the latest hike has been already priced in the market, less impacted on January stock prices, as like in the August of the last 2024. So inflation continued. We see that inflation of all the items strong. Sorry, this is maybe all items. This is a trend means. Sorry, this is all items. Green. Sorry, I think that the green line is not visible in here. This is all items, less fresh food, less imputed rent, and all item is blue one. This is about 3.65, our target level. But if all the fluctuating items like less food and alcoholic beverages and energy, they're 1.46%, 1.46 of the price index. So I think that some sort of this condition is still not touched to the target. So like a core inflation is not touched to the target level. And underlying inflation is measured by the trade mean, weighted median, and the model of the all goods. This is a trend mean is totally positive, but on January, available figure was at 1.7. So the underlying inflation is not touched to the target level in the first quarter of 2024. But now, available figure is above the 2% for inflation level. So the BOJ policy rate hikes is more likely in current figures. Move on to the potential growth level is below the 1 point level. The potential growth implies the next imply the growth rate of in the real term. So the projected growth rate is below 1% point. So the economic real growth will be below 1.0% in 2025. Then the contribution total factor is most biggest one. This is one kind of technological advances. And capital stock is also accumulated, but hours worked is decreasing and down and dragging the potential growth rates. Number of employees also in the stable and stagnating trends. So the economic outlook is not positive so much. So there's the output and input gap. So it's near equilibrium. Output gap is blue one is around 0. This shows that the economic condition is near equilibrium. It means that demand and supply is almost matched and no surplus. This is the condition that any kind of fiscal monetary policy effectiveness is narrowed. So the policy rate, so that the government or central bank cannot stimulate the demand or some supply by changing the condition of the policy rates. So real consumption activity not fully recovered from corona. This is consumption activity indexes of its nominal and real term. Nominal means not adjusted by the price indexes. Real means subtracted the inflation effect, inflations. So we see that nominal consumption activity is higher than the 100 level. This is a figure of around the 2020s, and also standardized at 2015 level. We see that the nominal activity is above 110, but the real consumption activity is almost around 100. So we see that the real consumption activity is not fully recovered from corona level. So this is the probability of policy rate by the BOJ. It's positive figure suggesting that the rate positive percentage point of the rate figure show that the probability of the policy rate is high, and also this is blue figure is a number of expected policy rate change in the next 12 months. It's less than the 0, it's less than the 1, so that from now the policy rate change is unlikely, and even in the end of the 2025, policy rate expected to be policy rate change. Number of policy rate change is also below 1, so it's likely that the BOJ will not raise the latest and policy rate. And so I also add some other comment. Current price lies largely driven by the rice price. The rice is one of the product commodity in Japanese market. So, and its species are also originated in Japan. So tariff imposed on 341 Japanese yen per kilogram on imported one. And this is effective of 10 to 40% or around 50% effective tariffs. Almost all rice that consumer can buy in Japan in retail store is domestic price. The inefficiency of supply chain tend to increase of necessary goods spending on consumer. So we can buy less to consumer discretionary products. Political instability occurs for reform of social security and public medical care system. So our levy and defined benefit pension plan cannot be unsustainable for decrease of birth rates. And so, but in current political situation, politicians are lean to the support of the elderly peoples. So our working age people are not, no, the opinion of working age people are not reflecting the politics. And social reform is now in a difficult conditions. So this what we're talking about, what happened before the end of the March. So I have to talking about what happened after the March 2020, after the end of the March. U.S. election had monetary policy outbreak before tariff. So let's look at tariff imposed by the Trump administration. So Mexico, China, and Canada. The baseline tariff for all countries is 10%. China, the figure is 125%. Mexico 46, Cambodia 49, European countries 49%. Japanese 24% tariffs. The purpose is adjustment to the trading balances, protection of domestic industry from international competition. This is the Trump support, protecting Trump supporters of interest groups. Tariff also include the countermeasure of the fentanyl, deadly synthetic drug come from Mexico and Canada. This is the reason of the emergency situation that called by the White House. So this is the fentanyl is some fundamentals of the reason that the White House can conduct such emergency tariff impositions. So immediate evaluation is that about reciprocal tariff is that there's a poor economic justification. Protection of industry by trade restriction may increase the inefficiency of protecting industries. So we see some comments from the Paul Krugman of economists of the Nobel laureates say that there's a poor economic justification, and it's the Trump administration optimal tariff theory is almost garbage. So we see that the reciprocal tariff routes export opportunity, also opportunity for exports from US. Then the trade balances. There the negative shows that imports exceed exports. There is the order of the largest trade imbalances. But we can also see that there are imports activity also backed by the exports activity. The trade balances is not a profit and loss of the company, but it's like a financial position of its company. So, for example, that if you exporting gained some rights of the importing goods from the country, from the foreign country. So if the tax imposed on tariff, there's a reciprocal tariff imposed on both exports and imports. There's a shrinkage for both export, also for exports. So such reciprocal tariff will cause construction of consumption. Tariff time to consumption price rise, so consumer surplus narrowed. Tax amount can be distributed to consumer, but distribution cannot fully compensate loss of consumer surplus. Such sort of inefficiency is called deadweight loss. So let's remember the bachelor level economics. We see the downward sloping demand curve and upward sloping of the supply curve. And if the price is moved to the upward, consumer can consume less, and But and also in accordance with the price shift of the equilibrium point, also the supply also shift to the downward. But so the tariff compensates such a loss, but there is a triangular figure, the triangular area that cannot fully compensate such a surplus loss, welfare loss. So restrictive production capacity will international trade allow countries to trade their goods and services based on the comparative advantage. But loss of trade capacity tend to narrow production possibility frontier. Total economic output and income decrease. So the outlook is like that accelerate inflation at first. Income decline causes deflation in the future. This caused the Great Depression in the 1920s of the US before the World War II. So will Fed cut rates? It's one of our interests that if the economic downturn is highly possible, so we hope that Fed cut rates for the countermeasure of the economic downturn. But we have to remind the purpose of monetary policy. Monetary policy is not the adjustment measure of the business cycle. Rates are adjusted for the price and employment stability. So rates cut may postpone for avoiding political compromise for central banking policy. So because the central government want to be considered that the central bank is compromising for the by the front administration. So I think that Fed in the short term to be hawkish. So the rate cut is not possible in the near term. The feature of the current situation is that fracting of stock and equity assets are almost equivalent to the Corona and Lehman shock. But Trump shock is by the real shock on productions and consumption. It's not monetary one. So I think the immediate rate cut and quantitative easing measure are likely if financial markets are in danger of liquidity crisis. But its current situation is not like that in like Lehman shock. So we also see the probability of policy rate changes by the Fed. This is figure derived by the implied forward rates of the federal rates. And this is all figure as a negative. Negative probability means that the policy rate cut is possible. But in the current near term, the number of rate cut expected is above -1. This is in the next 12 months. Is the market or market expectation implied in the forward rates is unlikely. So in the dry FOMC, it will be more than one time rate cut is possible. In the FOMC in the September, more than 2 times rate cuts may be probable in the next 12 months. So there's some inconsistency figures appeared in the some derivation of the probability. This is some technical issue. So I put some not available figure in here. But in the long run, the policy rate cut may be more probable in the future of the next 2026. So what's the difference from Great Depression? This is important things we have to consider. First one is currency system. And before, at the Great Depression, fixed exchange rate system abandoned after the end of the Bretton Woods system in 2090s. But in the Great Depression, there's a fixed currency exchange rate system backed by the exchange of the gold is applied in some countries. So competitive devaluation may be substituted by a rate cut. However, we bonded at zero interest rates. In the Great Depression era, some companies that apply a fixed exchange rate system, try to devalue their currency and putting their exporting their employment to the other countries. But this is impossible. We cannot do the same policy because there in the current in modern central banking, the fluctuating exchange rate is pride, and the central bank in most of the advanced countries see the independent central banking system. And if you try to devalue the currency rate, it will be rate cut and also quantitative easing. But interest rate or policy rate bound to be at zero interest rate. Combination of negative rate and quantitative easing is possible, but restricted by independence of central bank and limited by the government fiscal conditions. So if you see that the negative effect of the discretionary easing is more visible than in the 1920s. So we see that stock figures we see that such a broke economy is not replicable in current economics. And financial system, Basel III and the Fed, those liquidity LCR supervision may be avoid the immediate liquidity and solvency crisis. So tariff impact, price increase by tariff imposed, but appreciation dollar alleviate welfare loss of U.S. residents. So the U.S. as the Fed postponed the rate cut, so the dollar appreciated. So the appreciation dollar impacted the decrease the import price. So the effect of the negative effect of tariff will be alleviated. The possible relief and countermeasure of the Trump administration reciprocal tariff. The politics that the Republican Party may object and change the law to represent power and discretion on tariff. Court and jurisdiction. Tariff without jurisdiction will be written law will violate the constitution of the federal government. So the court may take action to abandon such a discretion of the Trump administration. Key person, Elon Musk Trump administration is opposing reciprocal tariff. This is one kind of the hope. Lobbying by important industry. Some sort of industry like the GAFA and the TSMC is lobbying to abandon the reciprocal tariff. So because of the advanced chip is very important product for importing. And the TSMC also constructing the Arizona factory, but but dispatching of the engineer is very difficult for Arizona, taking much time, and also have to dispatch more of the engineers. So we move on to sector overviews. There's a composition of the top in sectors, and this figure is market cap share of the topics of the Japanese markets. The electric appliances is most dominant sectors. Internet services also dominant sectors. And the bank is third biggest sector. This is by the perspective of the BOJ policy rate hikes. It's automobile transportation equipment is time to be postponed, and so because of the decrease of the transportation equipment or automobile sectors. This is the last 12 months sector performance at glance. The winner is bank in the gray figure, and the yellow straight line is the automobile sector like Toyota, Nissan, Honda, and this is a loser and underperform topic topics because of the bad perspective on the exports and variation change of sectors. This is PR tradition of its sectors. The red one is topics of the average of the all sectors and all economies. And some of the sectors fluctuating much. This is internet and services. This is including the internet sector and also some form of the internet retail sectors, retail company, and also some telecommunication companies. Electronic appliances is, I'm sorry, is relatively stable than internet services. And there's some small figure is electricity and food and transportation and logistics. There's a narrow, small PERs and there's a possible undervaluation, but also it's reflecting its fundamentals and room of their the ability to distribute to the shareholder returns. So we conduct some analysis for finding the possible over and under valuations of the PERs. Let's see that this line is its PERs, and the next right figure is the 12 months average of the PERs. The excess of the average of the current recent PER may be the sign of the undervaluation or overvaluation. Let's see that the negative of the excess of the average show that the company or sector is in the undervaluations, and this is the standard deviation of its monthly PERs. This is the standard deviation shows that the plus or minus of the one standard deviation will be the 68% fall into normal conditions. So in the average plus minus of the standard deviation is a normal fluctuations. But in excess of the average, absolute value of the excess of the average is exceeding the one standard deviation. It's maybe a overvalue, undervalue more than normal conditions. Electric appliance in a precision instrument is imminent, more than double, exceeding more than double in the standard deviations. Machinery and raw materials are also possible undervaluations. Let's see the PBR. PBR is a price divided by the book value of the company. So this is a small several figures of PERs. This is also the reason that company can exist in the continuing basis. The company can create value more than they invest, more than shareholder invest, can outperform the 1 over 1.0 plus 1.0 times price book values. So some of the industry below the 1.0 PBR is reflecting show that they're taking much showing some inefficiency of the capital utilizations. So possible undervaluation can be measured like that. There's also possible overvaluation. The bank is overvalued because of the excess averages over the standard deviation of the one standard deviations. There's some but there's some possible undervaluation found on many sectors. So I also conducted some risk measures. There is one daily average return minus standard deviation, and there's drawdown. means that the minimum price divided by maximum prices. It shows the how it shows the difference of good time and bad time. The daily they exceed 1 sigma daily return in 1 year is here, and 1 minus 1 sigma daily loss in 1 year is that like that. In average, 21 days of the one in 1 year evidence days, 21 days exceeding the one plus 1 sigma returns, and 24 days in 1 year show the excess loss of the daily average. Total day 4 out of 68% return loss is at 45 days in the topics, but in some of the sector that fall into the 41 days exhibit less riskier than the topics or average of the companies. So we see that some semiconductor rating industry companies may be a possible exemption of the tariff in the future. So we see that some rated sectors in here. This is performances like that. And we see some famous large caps is here. Many of the five companies exhibit a large ROIC and back spread. It shows the inefficiency of the capital returns. And YTD return is negative in some companies. But Fujitsu is one of the performing company in both YTD return of the price return and also in the financials. Semiconductor company rated to the fundamental TSMC rated vendors. This is some device production company related to the supply to TSMC. And some of the laser tech is one company that testing of the ultraviolet advanced chip for companies, advanced chip testing companies. This is almost all of them are negative YTD returns, but some companies performing financial performance is good, measured by the spread of the ROIC and the weighted average cost of capital. And also see the string PER and PBR is prospective. So some yellow highlighted company maybe now in the possible undervaluation because of the downturn of the imported tariffs and also DeepSeek shocks. Then the semiconductor industry related to the automotive chip and power device vendors. This is also closely related to Toyotas and also BYD. Maybe Socionext is maybe related to BYD and some Korean automotive companies. The Socionext is performing good in the capital return, but show a negative return in the year to date. So, other comment on semiconductor industry. The possible undervaluation may happen because DeepSeek shocks. DeepSeek optimization generative AI assumed to say quantity of GPU required for AI data center, but Jensen Huang and NVIDIA say that inference and reasoning should be longer, justify the continuing investment for massive quantity inference GPUs. Risk for vendor is that growth in GPU importance and accelerated developments may let conventional chips obsolete. So the ASIC and customer GPU and TPU may be replaced by the NVIDIA advanced chip and data center solutions, so that some vendor of the advanced chip may be lose by the NVIDIA's. China data center risk is also some downward perspective of the China data centers. Socionext suffered from cancellation of custom chip from China data center in the last release of the disclosures. So this is why the Socionext is decreasing its prices. And perspective also downward revised. Let's move on to performance evaluation of stock picks. And here is our stock section in the first quarter of 2025. Sorry, but I know enough time to explain in the last stock and pick strategy. Some yellow one is a new stock that I picked from the 2024 stock selections. And this is the figures that show in the last stock and pick strategy. And this is our result. In the initial port value was 4,736,000 invested, but in the end of the month, it showed a negative return and it's decreased to the 4,300,000 and extended to measure in the end of the last Friday. It will be almost 4 million, which decreased too much on almost 700,000 decreased. So stock pick return is also underperformed in the topics. This is a yellow figure is if you invest in the topics in the same amount of the money is a portfolio investment. In the middle of February, a portfolio outperformed the topics, but in the end of the March and in the end of last Friday, it will be far less than the topics portfolio values. But in the 12-month back test, if you invest in the fourth quarter of the if you invest in the 1st of the April of the 2024 in the 3.7 million, it will be outperforming the portfolio value outperform the topics in the last 12 months if you start. This kind of presentation is sometimes misleading because it's the good condition, start of a good condition is compounded by the next good conditions. If you start date is good performing well, then the compounding also perform well. So it depends on the first date of the measuring. So, but that kind of 12-month perspective could be replicated in the next 12 months if the past is a reflection of the future. It's not always possible. So the return figure is like that. Actual price return in the portfolio is 60% if you invest in the last year, but theoretical return or the monthly average, annualized average figure return is 30.8%. Standard deviation is not too much riskier than topics. It's a really stable portfolio can be constructed in the last 12 months. So portfolio financial result is like that. We see that some negative net income return in the Japanese exchange group, and Capcom is also show the income, the decrease of profit. Sorry, not profit loss. It's a decrease of profit, but price is performing well. Capcom explained that the prospective title of the gaming is slightly the next quarter. So because from that and the income decrease from the last year's third quarter of the 2024. So, but Capcom is also prospective and less is impacted by the exports of the exports because their their main product is gaming content. And some of prospective titles and also past titles of accumulating the profit and now increasing too much. And the Pepsi Dream is not performing in our portfolios, and also financial result is bad. maybe I will omit in the next quarter of the topics. So I think that we have to keep uh, some of the performing companies because their financial result is almost above the last year's, and the operating profit is very good, and over the double percentage, except the peptide dreams, and see that well, and current cover is also decreasing too much because of the net income is the growth of the income is not good compared to any kind of the competitor. But cover is strongly female talent management of the battle YouTubers and also has strong marketing base of the Indonesia and the Asian country. This can be the escape of the quality. We see that escaping to the Asian country is good choice, and the carbon anchor is also a good choice for like that for this strategy. Monotaro is also a good choice for very performing and efficient the internet e-commerce of the whole for the construction company and also for the for for consumers. Their dealing product is not discretionary product. It's about some construction materials, or like the nails or some kind of the industry parts. So this is like discretionary. So this is kind of protective selection of the company. Advantage is also now we suffer from the undervaluations, but its product is not well it's there's no tie on TSMC, but the product maybe could be a possible exception of the tariff, but I cannot tell clearly about that. So the concluding remark that BOD revised policy rates but still suffer from weak consumption activity and budget price inflation. Trump tariff affect negative real shock. It's not monetary. First affect real economic activity and then affect banking system in the future. Stock price is a procyclical one, and the stock price decline not suggests the immediate crisis of the banking system. So US economy may suffer inflation in short term, but then decrease of consumption production cause deflation in the long run. But a problem is very clear. The Trump administration, if the countermeasure and relief measure is taken in the future, the economics will recover, and the stock price may rebound in the short term. So, but I cannot tell when and how much. So DeepSeek optimization of existing generative AI, say quantity of GPU required. However, the longer inference still advantageous in the growth of the AI, advancement of the AI, and future increase of advantage demand is likely and prospective. But it's not concerning about the effect of the Trump administration tariff. This prospective scenario may be solved by the Trump administration. This is the end of the slides. Thank you so much. I also add some appendix of methodology that I measured some performance of the index and the portfolio performance. If you want to distribution, please ask for the Singapore's Phillips Securities. Thank you so much. Now I try to answer some questions. Do you have any question about my presentations? Let's see. Any question or comments? If it's here, question. Yeah. こんにちは、とめきさん。There any ETF trade on the this STA that track the topic index? I think that sorry, I don't much research about ETF. So, but some index ETF that name the topics maybe. Sorry, I think that this question is about the variable index ETF in the Singapore market. I don't know about that. Please ask our the market arm of the Singapore desk. Please, I'm sorry. I'm really sorry. I think that the volume is not. I think the volume is no sound. Sorry. I think that the adjustment is finishing the before the. I'm very sorry for the battle presentation. I checked before the question. Sorry, which ETFs are recommended for Japan markets? Well, sorry, I don't know much about research of the ETF. Think I think that. Something. So, do you have any?
Thank you, Miss Sumi. We will wait another 1 minute and see whether we have new questions.
Yes. Very. So,
All right, so if there's no more questions for the session, we would end the webinar today. So thanks again, Ms. Sumi, for the presentation. And we have now come to the end of the webinar, and we would like to thank all of you for joining. For next Tuesday, 15 April, we would have our last session focusing on China and Hong Kong markets. So do remember to mark your calendar. It's 15 April from 12 p.m. to 2 p.m. For the session just now, we will be uploading the recording on PhillipCapital's YouTube channel. You may view the recording of the webinar on your own time. Do take your time to fill in the survey so we can improve your experience with us in the future. You may scan the QR code on the screen. You may also join our investing communities to get free access to full research reports and discussion on technical analysis. Once again, thank you for joining us today, and we hope to see you next Tuesday. Stay tuned and have a nice weekend.